Hello, agents. My name is Danielle Navas. I am an agent, realtor, and mentor here with Texas United Realty. And tonight's presentation is quite the treat. I'm very excited about it. So we have Tasha Harvey with us, and she's going to discuss more and talk more about SBA loans, small business loans for commercial real estate. And I'm going to hand it over to her. She's got an amazing presentation lined up for you guys, and I myself am very excited. So be sure to pay attention. This will definitely help your clients as you proceed into commercial real estate. So by all means, Ms. Tasha, please take it away.
Thank you. Thank you, Danielle. So good evening, everyone. I'm really excited to be here, both in the capacity of an SBA Business Development Officer, but also as a fellow agent. So really excited to be here to share this information. I do have a very short presentation, but as with all my presentations, I want to make sure you guys, are encouraged to ask questions. And I just want to make sure that I'm here as a resource. So, for those of you that have any questions about SBA business financing in general, even if it's outside of how to use it for commercial real estate purchase transactions, I can definitely answer those questions, and we can hopefully, uh, get somewhere with increasing your understanding of this loan as a great opportunity. It's a great time for SBA. There's so many incentives right now that the government is putting in place to help with businesses in general in response to COVID. So again, my name is Tasha Harvey, fellow agent here in the Houston, Texas area, but also a business development officer with SBA or for SBA loans. The company that I work for is actually called Fundex Solutions Group, and we're a unique SBA lender in that we are not a bank, and we are one of 14 non-bank SBA lenders in the nation. So we're kind of in a very unique group. The other thing that's really unique about my company is that we're a preferred SBA lender. So what that means is SBA has given us the ability to make our own funding decisions, approve loans without having to send them directly to SBA directly. So what that does is it speeds up the process for clients. And that's really a big part of our agenda today. I'm going to talk about our process, how long it takes, what it takes for your clients to get into an application, what type of documentation they need. We'll talk about some of the recently closed deals that we've had. I'm going to talk about our guidelines. I'll talk a lot about some of those stimulus features that I mentioned, some of those incentives, and then we'll definitely have a Q&A session. A little bit about me personally. So I've been in the finance industry lending for over 22 years. Mortgage lending. So the first half of my career, I was, on the at the other side of the table from realtors, and so my specialty was first-time home buyers, and I love and helping them to uncover opportunities that they didn't even think existed. So that was my start. Back to today, I've been in SBA for about 5 years, working with small businesses directly. I'm also a business advisor at the Women's Business Center for the Houston Business Center. So really, really connected to small businesses and helping them to, just kind of just stabilize themselves, whether it's a startup, whether they need help with business plans, whether they need help with understanding their financials or putting things together. That's my passion. So that's just a little bit about me. All right, and I've already shared a little bit about FSG, Funding Solutions Group. One of the things that I didn't mention is that we're one of the top 50 most active SBA lenders in the country. By the end of first quarter, we had funded $53 million in SBA loans. And so what that means again for you is that, or for folks that are working with me, is that we know what we're doing. We know SBA. We're proven. We've got over 150 years of experience combined. You know, between our underwriting team, between our sales team, between our closing and funders. So we're just a one-stop shop as it relates to SBA. Okay. In addition to our experience, our process is just really streamlined. And one other thing that I would mention is that, you know, SBA, I know that everybody's probably heard of SBA, whether you've heard about it from a bank or from a broker, or maybe you've talked to someone at, you know, a local score office, or maybe the SBDC. There's so many ways that you might have heard of SBA. But one thing that I've found in the years that I've been working with SBA loans is that every lender is different. So every lender is going to have their appetite for the types of loans they want to process, whether it's the industry. You may find that some banking institutions specifically don't like to work with startups. You know, so you have to understand that SBA is simply the vehicle. It's a loan that's guaranteed much. It's very much like FHA. So the lender actually provides the funding and SBA provides the guarantee. So if the loan goes bad, then SBA covers the risk for that lender. The lenders in turn can put their own guidelines on top of what SBA's guidelines are. So that's where you kind of come up with, you know, certain credit criteria at one lender that doesn't work with another. So as it relates to FundX Solutions Group, we're flexible. We're not a bank, so we don't have a lot of the risk criteria that a lot of banks do. We are, you know, creditors that kind of think outside the box. Everything's not black and white, and so that kind of provides that flexibility. So a lot of times when I'm working with clients, and clients, just so you guys know, can be individual small businesses that are coming to me. It can also be business brokers. And quite often, business brokers are also real estate agents. So I work with a ton of, you know, referral sources or partners that actually bring deals to me. And we'll talk a little bit about my referral partner program, because I'm actually able to pay a 1% commission for referrals that are provided for loans that close, so 1% of the loan amount. But nonetheless, I think what sets us apart is our process and time frame. Typically, an SBA loan takes about 60 to 90 days to close. That's from start to finish. With us, we take pride in the ability to close a loan in about 30 to 45 days. And so it happens very much like you see on your screen here. A pre-approval is provided within 24 to 48 hours of receiving a deal package. And we're going to talk about what is a deal package, what information do you need? We'll talk about that in a moment. After I give a pre-approval or a term sheet, then that file goes into our underwriting department and a good faith deposit is collected. Typically it's $2,500. And our underwriters take about 10 to 12 days to turn that deal around, fully underwrite and provide a commit letter. Then we go through our closing checklist, which is things like title work, survey, title searches, business valuations, appraisals, that sort of thing. All those items are completed. And then we're ready to fund and close. And the funding is actually, you know, same as soon as the loan closes and the paperwork signed, the loan closes and funds right then and there. So all in all, 30 to 45 days is a time frame that we are able to achieve day in and day out. So now, mind you, and you see at the bottom, when you have larger loan amounts, it does take a little bit more time to underwrite and approve. But typically, we are able to get our loans out no more than 60 days and no more than 60 days. Here are some of our recently closed real estate loans. We've closed here, you see an assisted living facility in Alaska, a liquor store in New Jersey, photography services in North Carolina, um, a pest and weed control company in Oklahoma. As you can see, these industries are very far and wide from one another. So we don't really have a specific appetite of, we only want to close these types of loans, or we stay away from, say for instance, gas stations or C-stores. We have an open-minded approach, and we like to look at the business and, see how they're performing. And I will say that we've closed a ton of deals where folks had losses in 2020 because of COVID. But we've been able to see and justify that they've got upward trends, and they're doing much better in 2021. So we've been able to sustain and actually get them approved for financing. So I say all that to say, when you have a company that's flexible, that is not really tight with a credit box, and they're able to make common sense underwriting decisions, it speeds up the process, which is what helps us to be really competitive. So let's talk a little bit about those guidelines. This is really a game changer. SBA does allow for up to 100% financing. So specifically, I've got a small business that is expanding to a second location. Through SBA's guidelines, I'm able to get them in with financing with, 100% financing. So no down payment, no equity injection. I did have to have them cover that good faith deposit, because that's covering some of those third party reports like appraisal and business valuation and that sort of thing. But other than that, it's truly 100% financing. And even with the good faith deposit, they can get that back at closing, because SBA's underwriting guidelines in certain scenarios does allow for 100%. So that's kind of a little known fact, because most lenders don't honor that, but we do. The other thing that I think is really unique is that we can do startups, as well as those businesses that are using the funds to ramp up or to expand their business operations. So, a lot of times lenders want to make sure, or they want to verify that you have already proven yourself. You've got a historical performance capability to cover the debt you're asking for. Well, if you're asking for the debt to grow, then you don't have that. And so we understand that. So what we'll do is actually to put together some projections, so that we can see what your plans are for your future capability of covering the debt. And so we'll work with you on those. We want to see it in a spreadsheet. But again, very flexible when it comes to expansion. And as you see, it says there 0.75 DSC. That's the debt service coverage ratio. So basically what we're saying is, within the first 12 months, we want to see you be able to cover that debt with your net income at least 75%. And I think another thing that really sets us apart is when we're asking for all of these criteria and restrictions for our business owners, we work with them, we provide templates, we help them to understand, this whole process. So when I'm working with a borrower, we go through the templates of what we're expecting, all of the application documents. And so we try to make this process as easy as possible and not overwhelming. 700 FICO score. It's here on my presentation, but I'm going to tell you that I've closed loans with less than 700 FICO score. It's all on a case-by-case situation. And, we really, when we're looking at SBA loans, it's not just looking at your personal credit. We're also looking at the health of the business and the possibilities that you have with the business. So we underwrite both the guarantor, the individual, as well as the business. And that's why we like to see our business owners with at least 2 years of relevant management or industry experience. So even with a startup, if it's a startup loan or startup business and you've actually worked in that industry, then that's fine. We'll work with you. And another thing with SBA is that even if you don't have experience in a specific industry, If you're planning on hiring someone that does, then that qualifies. So there's lots of ways to show that industry experience, whether it's going to be you as the business owner or if you're going to hire someone. Um, the other thing about our loans is that, naturally you can use them for commercial real estate to purchase real estate, but you can also use an SBA loan for inventory, for working capital, for fixtures, for pretty much anything that will help your business to grow. Marketing, you name it. If it comes down to you need to hire new folks, staffing can also be an approved or eligible use of funds. So in order for me to get a pre-approval for a client, I need to have a deal summary, which can also be a business plan or an executive summary. But overall, I need to understand what they're trying to do. We collect 3 years of tax returns for the business. If there aren't 3 years of tax returns, that's fine, because remember I said we help startups. So that's not a deal breaker. We also want, for those businesses that are existing, we want to get financial statements. So we want a profit and loss, we want a balance sheet, we want a debt schedule. We want to understand, how's this business been performing? So we'll ask for those documents. Projections for the business, we want to know if you're asking for, 500,000 or whatever it is you're asking for, how is this going to impact your business? What are you projecting your revenue to be? What are you projecting your expenses to be? I mentioned earlier that the loan is not just about the business, it's actually, your personal. So we're going to pull your personal credit report, but we also want to see your personal tax returns. And then last but definitely not least, we want to see a personal financial statement, a PFS. That's going to give me an idea of your assets and your liabilities. So as I said earlier, when we're underwriting for SBA, it's not just the business, it's both business and the guarantor, the individual. And as I'm speaking about guarantors, a lot of times you've got partners in businesses. So anyone who owns 20% or more of the business is required to be a guarantor on the loan. So we have to think about that. And I've even had folks that have, structured the ownership of the business to reflect how they want the financing to be if they're going for an SBA loan. So I've seen some folks that'll, have ownership interest at 18% or even 19%. And all of that is acceptable, but anyone that has a 20% or more interest in the company has to be a guarantor on the loan. So I talked a little bit earlier about some of those special things that they're doing, the incentives for SBA as it relates to COVID. So the first thing you'll see is a 90% guarantee up to 4.1 million. And that's actually an incentive for the lender. So it really doesn't impact the client much, but it's an incentive for lenders, because what this is saying is if the loan goes bad, SBA is going to cover 90% of the loan and replenish the lender. So there's only a 10% risk that the lender has to make the loan. Typically, in a normal environment outside of COVID, the guarantee is 75%. So this is a really big incentive to get the lenders out and approving more loans and getting more businesses the funding that they need. The next bullet point is that SBA is temporary waiving the guarantee fee. This is a really big one for the client because it's a part of the closing cost. Typically, the guarantee fee is 1 to 3% of the loan amount. And so they're waiving that. So it's a part of the closing cost that a small business does not have to incur at closing. I think probably the most impactful incentive is the fact that if a loan is approved before September 30th, 2021, SBA is making your first 3 months of payments for you. So up to $9,000 a month, SBA makes those first 3 months of payments for you. So this is really allowing a lot of small businesses the time that they need to get ramped up It's a grant, so you don't have to pay it back. It's just an incentive. So they'll make those actual payments for you, the principal and interest. So it just gives you a leg up, gives you the chance to ramp up. So I don't know about how long they're going to do it. I know that right now it's September 30th, but I know if anyone's familiar with some of those COVID related stimulus incentives, they've changed dates on many things like PPP and the idle loans. So stay tuned. But right now the deadline is September 30th. So that's really all I have. But again, there's so much to talk about as it relates to SBA and business loans outside of just commercial real estate. So I'd like to open up the floor for questions, comments, anything related to business financing or the process. I'd like to be able to answer those questions for you guys at this time.
I have a question for you.
Sure.
What is the typical loan term? Is it like 10 years, 20 years? What is the
Mhm.
typical?
Yeah, it's a really good question. So if you're dealing with real estate, it's a 25-year term. And that's great when it comes to spreading that payment out, lowering that payment. If it's not real estate and it's equipment, then typically it's either going to be 10 years or the useful life of that equipment. So you might get up to 20 years on a piece of equipment. For instance, I financed a couple planes a couple years ago, and I was able to get the term up to 20 years. But for the most part, for working capital, for inventory, for those kinds of loans, it's going to be a 10-year term. And I'm speaking from what is typical because some lenders have other criteria. I've seen 5-year SBA loans, I've seen 7-year SBA loans. But for Fundex Solutions Group, we either have it at 10 or 25, or if there is some type of specific equipment, large equipment, we'll like I said, we'll finance it for the useful life. But typically 10 or 25 are our terms.
Got you. And we have a question in the chat, and it says, is the application fee refundable if the loan is not approved?
Yeah, that's a really good question. And yes, it is. So I'm going to actually go back. Let's go to the process here. So when we're at pre-approval, that's when we're going to have all the documentation in, and the underwriter is going to do what's called a pre-screen, and we get you that term sheet. So when we get to the point where we collect a deposit, we could ask that we wait until you get the commitment letter, so the full approval from the underwriter, before we start spending that $2,500 good faith deposit. If you have any concerns about that. That way, you get the full $2,500 back if for some reason the loan is not approved completely. But typically, if a customer is feeling, they've got pressure, they've got a time frame, and the deal looks really good, then we'll go ahead and start using that deposit towards the third party reports that are necessary. So I guess, definitely it's fully refundable, but you have to be strategic in the very beginning and let your lender know, hey, I don't want to use that deposit towards anything until I have a full commitment letter. And that's your full approval. But if you're working with any lender and you pay a deposit, you want to make sure that you talk about that up front in regards to that, because typically a lender is going to use that deposit to start paying for third party reports.
Should a person have their, I guess, business plan or whatever together before they move forward, or do they, it's kind of like the house shopping thing. I got to get my pre-approval letter before I start house shopping. Or I guess, and this question I imagine would be pertinent if maybe they were wanting to lease something, like a plaza, and they don't want it to, somebody else to come and take it from them. And obviously this is a process. So
Right. Yes. Of course, it's very much like the a pre-approval with shopping for a home. That business plan is a part of a full deal package, right? So I can't, most lenders aren't going to go and give you a pre-approval unless they know what your plans are for this business. So that would be inclusive of projections, that sort of thing. Now, the only time that I've seen that a business plan is not required or as important is if you're an existing business, you're already profitable, you're proving yourself, you've got tax returns and everything else, and you're just simply trying to purchase another location for your business. And so in that case, it's not as important to have the business plan. Your lender may want to get like an executive summary of who you are, what your business is, and what it does. But a full blown business plan is usually required only if you're a startup.
And do you assist with, do you guys offer services in helping a start up a business plan, or does the client need to
Mhm.
get that done on their own?
Well, the good thing is if when you come to me, I'm able to assist to a certain extent, but then I can connect you, and most lenders do. They connect you to a resource center, whether it be the Small Business Development Center (SBDC) or SCORE, which those are mentors that have previously worked in corporate America, or and then also at the Women's Business Center. That's a part of the free services that are provided. So, we can help you. I have templates that I give to my clients all the time, where they can go in and just fill in the information for a business plan. But if you really want that one on one support, I would definitely, you know,
I'm sorry, you would definitely, what? I'm sorry.
I would refer you to one of those resource partners who provide all those services for free.
Fantastic.
Mhm.
Any other questions, guys?
What Well, while you guys are thinking, there's one thing I want to make sure I clarify, because I often get calls for folks that are wanting to just purchase commercial real estate as an investor, right? And so there's a fine line with how SBA can be used. SBA is really considered for owner occupied real estate. So it's not really for those that are looking to purchase a strip center and they're going to be leasing it out to tenants. An SBA loan can't be used for that. But if you are purchasing a strip center and you've got businesses, or that business is going to occupy the majority of that building, then it is allowable for you to lease out up to 49%. So I just want to make sure I'm clear on the use of funds for SBA, because I get a lot of calls for those kinds of deals, and those really need to go to commercial real estate lenders or asset-based lenders.
That's a great one. I often do hear of, yes, investors wanting to build a plaza, or I hear a lot of
Mhm.
gas stations, like convenience stores and stuff like that, that they want to purchase. I hear that quite a bit.
Yeah, yeah. The key is, my question is the business occupying the space, and does this business actually provide a service or a product? So if it's like a business that's in their main source of revenue is from rent, then that won't qualify.
And I think you answered this before, but do you guys do like a form of investigation, like for that? Let's say that the person said, I imagine in their business plan they put where they wanted to put this business. And
Mhm.
so do you guys go through a process of, hey, what is the average income around here of people that may actually want this service, to see how successful the business may potentially be?
We lean on realtors to provide us with that market analysis. So what we ask is for the borrower to include, either give us the write up or the market analysis for the location from the realtor, or include that in their business plan. So we don't do the research, but it is definitely an important part of the loan application or the process. The underwriter wants to make sure that this location makes sense. So it's required.
I have a question.
Mhm.
What if there's a young lady that I know that wants to get a loan to do some real estate development for senior housing? Would that be allowable?
Well, it just depends. So when you say she wants to do senior housing, are we talking like an assisted living? Are we talking about senior apartments? What?
Senior 1-story like duplexes.
Yeah. So that's definitely going to be a commercial real estate loan request. Because her main source of revenue is from the rent that she would be getting from those tenants. Now, if she were operating an assisted living,
hold on, no, hold on. She wants to sell them. She wants to build them and sell them. Create like this little small, real estate. I'm sorry, senior duplex.
Yeah. So same thing. Same thing. So her income is coming from the sale of real estate or the rental of real estate. She's not providing a product or service. So she would definitely want to get a commercial real estate loan where they're basing the loan on the asset, not based on her business projections and such. It's an asset based loan strictly based on the real estate.
Awesome.
Yeah. So I was going to say that the twist to that though. So say for instance, just hypothetical, a person is purchasing or wanting to build property that was going to still satisfy or support that market, the senior industry. But what they're doing is they're providing services as well as the housing. So they've got, they've got nursing staff, they've got, it's assisted living. Those qualify because it's not just the real estate or rent, they're actually providing services. And that business is looking to do the financing. It's a fine line, but yeah, I always say, are they providing products or services? That's really the easiest way to look at it. If they're just in business to rent or to sell real estate, that wouldn't qualify for SBA. And I'm speaking specifically, from a real estate standpoint, you couldn't get an SBA loan to finance that real estate. Now, let's go back. Say, for instance, it is a company, they're an investor, and they have employees. I could provide possibly a working capital loan because of their employee. They're looking to do something from a working capital perspective. But I can't finance the real estate when that real estate, that use of funds is to fund investment, sales, or real estate rental income.
Awesome explanation.
Yeah. So like I said, the biggest thing is, is the business providing sales, or I'm sorry, products or services? And what is the, just to kind of hone in further, how is the revenue generated for this business? Is it passive income like rental income, or is it actually earned income from sale of product or services?
Yeah. I have a question in the chat. Usually, what is the interest for an SBA loan? The interest rate?
So the interest rate, you're going to find that banks, larger banking institutions, will advertise really low interest rates. But typically, most SBA lenders base their rate on the Wall Street Journal prime rate, which right now is 3.25. And what lenders do is they call it the spread, or what they add on to that Wall Street Journal rate. Most lenders add 2.75 to whatever Wall Street Journal prime rate is. And so for us, the end rate is 6%. And so, like I said, it's very typical. But you'll find that a lot of banks, and I know personally because I've worked for big box banks, they can advertise those low interest rates because typically their credit box is a lot smaller, and the clients that they are able to approve are existing customers with high assets on deposit. Um, but again, you may find rates lower than 6%, definitely quite possible.
The
But for the
fine
most part,
print.
SBA lenders are going to be at or around the 6% mark right now, currently, because of the Wall Street Journal rate.
Yeah, that fine print that they don't tell you about, right? When they
Mhm.
talk so fast.
Yep, yep, yep.
Um, can you please let me know what is this current 6% that you're looking at? Is this an average of like pre-COVID, or is this a change due to COVID?
So I would say that it's actually lower than it was pre-COVID,
Uh,
right? Yeah. So yeah, I was looking at, let's see, back in 1918, the rates were like seven and a quarter.
oh,
So it's definitely lower after
yeah,
COVID. I can't say what's going to happen. I mean, rates have been low for quite some time now.
yeah.
So who knows what's going to happen? But I can tell you that SBA's rates are typically adjustable. And again, this is lender specific, but those rates adjust with whatever the Wall Street Journal or prime rate is at.
Gotcha.
Okay. So, but again, these are questions that, depending upon which lender you're working with, you want to find out what's your rate and is it adjustable or is it fixed? And then the other question to ask is there a prepayment penalty?
Mm.
Okay. So some
Um,
lenders have a 5-year prepayment penalty. Some have 3. It's just, it's really up to the lender. We've got a step down prepayment penalty that decreases in amount over 3 years.
and so is the only thing that is currently being offered due to the COVID is that you had mentioned it earlier, it
Mhm.
was
I'll
a
go to
closing
it.
cost fee.
Yeah, let's see here, right here. So the last 2 bullets are the incentives that impact the client directly. It's the waiving of the guarantee fee, which is, like I said, it can be between 1% and 3% of the loan amount. So with those higher loan amounts, that can get, really expensive. And then the other thing, which has been most popular, is the waiving of the 3 months of payments. And
Okay,
this
and do
is for
you,
new, this is all for new loans. They've had a ton of different incentives for those who already had SBA loans where they've already had, payments that were waived and that sort of thing. But this is for new SBA loans.
and would this loan satisfy or be possible, let's say that it was a commercial property like on the side of a freeway kind of thing,
Mhm.
and you wanted to buy the lot that's there and then build on it and then have your business there. This
Mhm.
would cover that full-on
Mhm.
expense,
Yeah,
correct?
yeah, it would cover construction. So with that, you have to be really detailed with the construction company that you're using, and they have to provide all of the estimates. And then with construction loans, we account for overage. There's a 10% contingency amount that's added in just to cover unexpected costs and overruns. So yeah, there's a lot that goes into the construction loan because there's draws that have to take place. Um, and so we do screen the contractor that is being used, and that contractor almost has to be they have to be approved because a lender wants to make sure that the contractor is going to finish the work. So be prepared if you've got a client that's looking to build something. Be prepared to have a reputable contractor in mind and ready to provide information to the lender as well.
Uh-huh. And so best to use somebody licensed, insured, and all
Oh
that good
yeah.
stuff.
Oh yeah.
Yes.
Even though, yeah, and I know you guys know, even though in the state of Texas you don't have to have a license, for lenders, they like to see licensed folks. I've got a deal in right now where I've got a funeral home. He's just getting some minor work done, but my underwriters, we lend nationally and they just don't understand. Most states require licensing. And so that's a big thing. So even though it's not required in Texas, just know that lenders most of the time will want to see a license. So just something to think about. Not saying you can't overcome it, because you can, because the state doesn't require it. But when you're dealing with national lenders, that's really the thought, is that we need to have a licensed construction contractor.
Is there a minimum amount that you guys approve for? Like, does it have to be like a minimum of 50,000 for you to work it?
Yeah, so my minimum is really around 200, 250. But if there is a need for smaller loan amounts, there are some other lenders that I definitely refer to that are nonprofit lenders. They're called CDFIs, Community Development Financial Institutions, and they're nonprofit lenders that are often funded by big banks, meaning that these big banks, they provide grants to these smaller lending institutions so that they can in turn provide the loans that the banks won't do. And so there's several of them in and around Houston area. There's Lift Fund, there's People Fund, there's HBDI. I think that stands for Houston Business Development Institute, I believe. And then there's another one called True Fund. And they often work with startup businesses as well. But those are the kinds of entities that can take loans as low, or loan requests as low as $5,000. So when I get a deal that is, too small for me to take, I often refer them over to one of those nonprofit or CDFI lenders, and they're SBA lenders. So you're getting, an SBA loan. It's very reputable and not one of those lenders, high interest loans and all of that. They're very reputable, but I often send my smaller loan requests to them.
And I think my last question is, what happens if the business flops? Does this kind of end in bankruptcy if the person can't pay it back?
It could, and I'm glad it's a great question, because SBA loans are all personally guaranteed. And so even though it's a business loan and it does not appear on your personal credit report, if the loan goes bad, then definitely the SBA can come after you. And notice I said the SBA, because remember, the SBA is providing a guarantee to the lender, right? So the SBA is going to pay the lender off, but then they'll come after you personally to cover that debt. One of the unique things about the state of Texas, though, and there's a safety net in for small businesses, is that we can't take your homestead, your personal homestead, as collateral. And in other states, folks, when they get an SBA loan, if they don't have business collateral or commercial real estate, they have to pledge their home as collateral. And so we don't have to do that here in Texas. We have laws that protect business owners' homestead. So there's a lot of loans that we do personally at Fundex Solutions Group where it's not 100% collateralized. And if that loan goes bad, then, we are pretty much, we'd have to go after maybe any business assets. But yeah, typically those folks, it could potentially end in a bankruptcy or something of that nature. But at least you won't lose your home.
Yeah,
And
you don't
I
want to be
think that,
homeless. And
yeah, right. So I think that's one of the good things. I think Texas has that in place, as well as Florida. And there's one other state, and I don't know it right off the top of my head, but it's the protection. And I think it's a really great thing.
Yeah.
But, we try to do our due diligence up front to make sure that we've vetted your business, vetted your, if it's a startup, we've looked at it thoroughly. to make sure we're making a good decision, because we don't want to set anybody up for failure.
Right.
And so, so we try to do that as a lender. The other thing I've seen is that sometimes folks will come to me and say, I only need 200,000. And then I look at everything and I'm thinking, well, that's just putting a Band-Aid on things. And so that's another thing we won't do. We won't fund you for less than what you really need, because we don't want to set you up for failure. So one of the things that I tell my borrowers is that let's talk and let's think about it. Let's get with your CPA or whomever you've got working with your finances. Make sure you're really thinking this thing through. And sometimes think about it like you got a magic wand. What is the perfect scenario? Ask for what you need up front, as opposed to trying to piece things together afterward. So we just try to upfront, we try to just do our due diligence, make sure that the business owner is really thinking it through, and that we're providing the best support by funding exactly what they need in the very beginning.
Awesome. Well, guys, I'm going to go ahead and, if you guys have further questions, you're welcome to go ahead and reach out to Tasha. You want to put your information one more time so they can contact you.
There you go.
There you go. Feel free to reach out to her if you have further questions about this. Thank you so much, guys, for tuning in this evening and getting all this great information. And I look forward to seeing you guys next time. And thanks so much and have a great night.
Thank you.
Thank you.
Thank you. Bye.